Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Some are starting to say that we are 6 months out from a food crisis. This is important because the shelves start emptying, and then we have number one, civil unrest. That's what we'll talk about first. The second thing, this food crisis, the farmers, fertilizer, all of those details. And the third thing is what's going on at the Fed. Never take our eyes off the Fed. Let's begin by taking a look at the inflation rate. Now, what is inflation? First and foremost, when I'm saying inflation here, I'm talking about price inflation, okay? But we can look at the monetary aspect. Inflation being the amount of currency that's actually being pumped into the system, how much of it is in circulation. That is inflation, okay? But you see the correlation in between the two. Lots of money being printed, all the debts and the deficits have risen just about everywhere around the world. And then, of course, we see that prices are rising. Now, the prices have not been rising just for the last 2 years. No, this has been over a very long period of time. The most significant rate of change, of course, happened from 2020 up until present in the amount that they've pumped in. But you take it back a step further. What about since the financial crisis? Let's go back to 1971. That's when everything started going wild, okay? And you go back to 1913 and so on. This is the true inflation, TRU inflation, that gives us a better measurement of inflation than we would get typically from any of the statistics that the government provides us. You can look at shadow stats as well. John Williams provides that data based on the way that it used to be calculated. Okay, we don't have to guess. We don't have to do anything like this. We can see different indicators, and regardless, it shows a higher inflation rate than what the government stats will give us. So you could look at this and break it all down, transportation, for instance, and food. But it all depends on you, because maybe where you live, this isn't the case. These are averages. But all we need to know is that inflation is rising. And then we see many factors that relate to that. Okay, Beijing shuts Universal Studios, bans restaurant dining, in a major escalation of restrictions. This is Beijing. I was telling you previously how there was the lockdowns that were taking place in Shanghai. And there were first 50 cities, then 100 cities that were under some sort of either partial or full lockdown. And now it's going towards Beijing. I think this is really important to focus on because when you have problems at the Shanghai port, which I have right here, what happens to the supply chain? We saw this. We saw this all along, and it wasn't good. I think there might be more problems today with shipping than we had 2 years ago. Shanghai ship jam spells supply chain trouble. Cargo and tankers in Shanghai port area on April 28th. So you could see that all of them waiting, just waiting for their turn. And then, of course, they go inward. So this just gives us an idea of what's happening. As prices increase, as things are more in shortage, you see the protests, you see the civil unrest. Greek workers protest at energy cost surge in May Day rallies. What about this? Cubans take to the street on Workers' Day for the first time in 3 years. And then we have violence erupting in Paris. May Day, Workers' Day, right? And you look at this all over the world. People are fed up. People are pushed to the edge. Prices are rising faster than they can deal with. And so what do? They take to the streets. I've said it many times before. Anybody who has read my second book, they flip to the back, and it's also inside the book too. But I purposely wrote it on the back because it says, soon the earth will rumble under the heels of the angry mobs. And that's because of this. When the stimulus would run out, eventually the people would show themselves out on the streets. And I think that's really, really wise that we waked up to it. Okay, we just got to wake up to it. But what's happening today? You look at inflation and the direct effect it has on people, and it is significant. Surging prices force consumers to ask, can I live without it? Spending habits are starting to shift as consumers set the priorities. Consumer prices have risen at the fastest clip in 4 decades. Some companies, like airlines, have benefited, while Amazon is seeing a slowdown. I think there's much more to it than that, but just you can see people's patterns start to shift. I also want to note that we have seen a massive surge in credit card usage. People were using these right now, surging up. I showed you the data on that not too long ago. I do bring lunch more often. I could make coffee in the office. So these little things, and while, you know, I think it's a personal preference. If somebody wants to buy that $7 Frappuccino or whatever, they could do that. Probably not the best investment choice. But regardless, these affect people because if you don't buy that $7 Frappuccino, you don't want to have somebody working at the Starbucks or less need for the person at the Starbucks or whatever, place it is. If you're not going to the restaurant, well, then that person's not needed anymore. And slowly less jobs are needed. And then you have a direct impact. Now, some would say because there's so many workers out there and so many job openings that maybe it's okay. But I think we see the writing on the wall. I really do. We do believe that the consumer is going to be spending, according to Macy's CFO, whose job relies on saying that. But are they going to be spending on discretionary items that we sell? Or are they going to be spending on an airline ticket to Florida or travel or going to restaurants or more? Or perhaps they're going to be buying food as it starts to run out. But you didn't hear that from me because that's too frightening for some. Unique economic woes. Inflation ran at 10.9% in February in the Phoenix area, highest of any urban region. So you can see that. I mean, look at this. Phoenix housing prices, 32.9% year over year. Unbelievable. Really. I mean, but you look at all these other areas. I mean, it's showing us Baltimore, Atlanta, Phoenix, and Miami. All of them have risen considerably. But I mean, you stretch it out further, it's all over the place, right? Here we go. Can the world feed itself? Historic fertilizer crunch threatens food security. A run-up in prices and shortage of man-made nutrients are forcing the agriculture industry to adapt, and the impact could be severe. Yes, I understand that you may grow crops and you don't use fertilizer, and you could say we don't need fertilizer. But let's just get to the important factor here is that this is what they do. They are using the fertilizer. I think it's bad. It's bad to use fertilizer. This is what they do. I'm just here to bring the data to you. This is the quote. I'm reducing the use of fertilizer in this crop cycle. I can't afford such stratospheric prices. This is a farmer in the Philippines, okay? And he just goes on, and then we get this quote here: if fertilizer are expensive, we'll use less fertilizers. If we use less, we'll produce less. Food prices will increase and everyone will suffer. Imagine where you are at today, knowing that the food prices are going to go much higher from this point. We are now in a world in which we got to think 6 months down the road. We've got to think a year down the road. Where do you think food prices are going to be? Is it going to be 5% more? Is it going to be 10% more? Or are you going to be eating nothing but soy because that's all available? That's the only thing available. You better get your situation in order. Okay? This is my message to you. If you appreciate that and the constant reminder, hit that thumbs up. I'm trying. I don't care if I'm repeating myself. People are going to starve. People are going to, this is not good, people, okay? I just think people have become so accustomed to everything being available to them. Oh, maybe this product isn't there this week, but I'll just get that other brand. Well, all the brands maybe won't have it. Or, yeah, the bread's going to be there, but that loaf of bread that used to cost $2 is now $37. Yeah, you can have it, but can you afford the $37? And you might say, nah, that can't happen. I hope not. Hope not. Okay, so let's look at the next aspect here. My friends in Australia, Sydney house prices slide further in April as rate rise looms. I thought it was interesting that they haven't increased yet, but already we could see that the prices have come down. I mean, just a little. So maybe we have a topping pattern, but I do think, just like in Canada, if we see the rates continue to ratchet up, then the prices could be affected by that. Okay, right now, nothing to worry about, but it's worth noting. All right, price stability. This is Powell. This is our friend Jerome Powell. If we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do that. And I wanted to highlight this here. They've got a $9 trillion balance sheet, okay? $9 trillion. And I wanted to be, forthcoming with this information to let you know that they've got a long way to go to get to neutral. It's very clear. But just seeing this, I've never really heard them, at least Powell, in the last few years. I've never, ever heard of them saying this. This is the first time. They're always saying, you know what, we're like, they're so cautious about what they say. And now saying that we will go beyond, we will make it very restrictive if necessary to get inflation down, to get price stability in check. Have you ever heard of Jerome Powell saying something like this before? End of easy money brings a $410 billion global financial shock. Inflation is pushing central banks to shrink their balance sheets as they hike interest rates, adding a new risk to the world economy. Everybody should be paying attention. Look at it, okay? Bloomberg put this chart together based on the data, based on their forecasts. The gray area is the forecasted area. And we could see that this decline in the balance sheets over the next couple years would be extremely significant. If you look at it, I mean, I could pull out the highlighter. I don't know if that's going to make it any better for you. But this period here, okay, where there was, it's so small in terms of the total amount of money that was, less money was being printed. I mean, they were still printing out there, depending on the central bank. And then, of course, we hit 2020, all central banks, all governments, they were doing their things. And then it continued on. However, we are now in a different phase in which we are going back to that 2018 scenario. Difference, inflation was nowhere near where it is today, based on any metric you use. So, but look at the jobs market. Okay, let's just think about this. Inflation. Inflation is very high. Jobs market, according to what they say, it is extremely good. Okay? What about the employment factor? Unemployment is extremely low right now. Many factors that would say they don't have an excuse at this point based on their mandate, the dual mandate, right? Dual mandate. They have no reason to stop what they're doing on this quantitative tightening path. So we'll see. I don't know. I can't predict the future, but I could tell you what we're seeing today is very concerning. That's all. If you appreciate the information, hit that thumbs up button. If you're not subscribed already, what's going on? Is your button broken? Let me reach down there. Let me grab that for you. Let me hit that. You got to subscribe. I do appreciate that very much. I'll see you on the next one. Take care.